Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Spill. Markets can be unforgiving. Goodyear Tire and Rubber reported earnings and revenues that beat expectations, yet the stock cratered 27%. JP Morgan analysts just came out stating the sell-off was overdone, and we agree. Goodyear Tire doesn't see price movement like this often, if ever. We also see further evidence of interest by the surge in searches by financial pros for the company of 30 times the typical volume. Our analysis below digs into what the company does, along with its financials, what caused the sell-off, and why we see a ton of potential here. So, following the company's acquisition of Cooper Tire, Goodyear became one of the largest tire manufacturing companies in the world. You've probably heard of some of the company's brands, including Goodyear and Dunlop tires. Besides consumer tires, Goodyear manufactures and sells tires and related products to a host of industries, from aircraft to farming equipment. In 2019, Goodyear entered into a joint venture with Bridgestone to form the largest tire distribution network in the U.S. And in June of 2021, Goodyear finalized its merger with Cooper Tire, strengthening its leadership in the industry. The company expects raw material costs to increase $700 to $800 million in the first half of 2022, net of savings. You can see the impact in the Q4 results. The good news is that pricing will continue to help keep margins from collapsing through 2022. However, management forecasts break-even free cash flow in 2022. General revenues dropped off during that same period before bottoming out in 2020. However, the company continued to deliver solid operating and free cash flow. So, while it is disappointing the company won't deliver positive free cash flow next year, it's not the end of the world. In terms of valuations, there aren't too many tire manufacturer stocks out there. So instead, we created a comparison between Goodyear and several other car part suppliers. And across nearly every measure, Goodyear Tire comes out as the cheapest. In our opinion, this is a 7 out of 10 stock. We expect markets to fully price in the raw material costs for Goodyear in the coming months. However, auto demand remains strong and oil prices will eventually fall. We expect 2022 to be a tough year for the company, while 2023 onward should see benefits from the merger with Cooper Tire as well as pricing improvements. Ideally, we like shares around $14.50. Click and subscribe to the Spill newsletter to get the full breakdown.